Good afternoon and welcome this afternoon to Getting Started with Technical Analysis, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab, and I'm joined today by my good friend James Boyd out there in the chat. And he's going to be there helping to answer questions along the way. He is a great instructor. Many of you know him already if you've been in any of our webcasts. Many of you may not know James, 20-plus year veteran in the financial market and a great resource. And he's going to be there to help answer your questions. Questions like, what do we do with volume? That's what we're going to talk a little bit about today, all about volume and a variety of different volume indicators as we talk about technical analysis. And if you've been in any of my live events, you know that this is one of the things that I don't talk about quite often, perhaps not often enough, is about the use of volume. So I wanted to explore this topic today in this discussion. And so thank you for joining me, whether you're here in the live version or the recorded version. We appreciate you being here and be a part of the conversation. Chat those questions in to James along the way, or leave a comment if you're in the recorded version. A couple of quick housekeeping items as we get started here. Remember that everything we talk about is simply for illustrative and educational purposes only. It is not considered an individualized recommendation or personalized investment advice. Any symbols that we look at, those are for illustrative and educational purposes only. Remember that investing involves risk, including the loss of principal. There are lots of different ways to look at the market, including technical analysis, including fundamental analysis and probability analysis. All of them are theoretical in nature. None of them are guarantees. Therefore, Schwab doesn't recommend the use of technical analysis or really any one single method of analyzing the market as a sole means of investment research. Remember, the past performance, no guarantee future results. And when we get into some of these discussions, you have to take into account the fact that news happens, things change, and markets can and sometimes are volatile. So a couple of things also to keep in mind here. We're going to be using the Thinkorswim desktop software platform, specifically the paper money version of the platform. And it's a great learning environment. It is not, however, a guarantee of future success out there in the real world. So as we get started in this discussion, here's where we're headed. We're going to talk a little bit about technical analysis, the what and why. We're going to talk about some technical analysis strategies, and we're going to take a look at the Thinkorswim desktop software platform for some examples. And we're going to go ahead and we're going to shift over there right now. I'm going to pop over to the Thinkorswim desktop software platform. And as I do that, I'm just going to say this. Now is a good opportunity for me to remind you or tell you, if you haven't heard it before, that you might want to click on that subscribe button down there at the bottom of the page. It's a great way to stay connected to the Trader Talks webcast channel. It's a great way to stay connected to this community. And it helps us to pop this content up to other people as well. Now, the other thing to think about too is you can follow me, you can follow James, all of the education coaches on X, formerly known as Twitter. My X handle is @BenWatsonCS. James is @JamesBoydCS. The other coaches, they follow the similar naming convention. You're going to find us there. Be aware that there are some imposters out there. So make sure that it is Ben Watson CS or James Boyd CS to avoid those imposters. Now, as we take a look at a particular symbol here, and I'm looking in this case at BK, Bank New York Mellon. And I wanted to kind of bring this into the mix because there are a lot of different tools that we use in technical analysis. And we use technical analysis to identify trends, to identify levels of support and resistance, to give us an opportunity to make informed investing decisions. None of them tell the future, right? Because news can happen. But one of the contextual data points of understanding that we have is trading volume. The volume of activity that takes place throughout the trading day. So what I'm going to do from this basic bare bones candlestick chart, which has no volume indicator on it, I'm going to take it back to what perhaps the default volume perspective. And so I'm going to come up to this little gear icon up at the top of the charts tab. So I'm on the charts tab, and I'm going to go to this little gear icon. And I'm going to go to equities right here because this is a stock. And I'm going to click one click. Now, I've deselected this to make this a plain chart, but I'm going to click one click right here, which is show volume subgraph. And if I click on apply and OK, now you see volume down here at the bottom of this chart, right? And this is telling me trading volume by date. What it doesn't tell me, and what it can't really necessarily tell me, is this buying volume? Is this selling volume? We have to do a little interpretation and a little interpolation of what's going on with price movement to give us that assessment. Because there's really nothing that says, hey, this is buying volume versus this is selling volume. There are indicators that purport to do that, but think about this in terms of volume of transactions. It's kind of a misnomer to say there's more buying than there is selling, or more selling than there is buying, because these are two-sided transactions. What there is price movement in a particular direction and volume associated with that. There's a lot of mythology that goes into volume, which is one of the reasons why I don't often teach this in a new environment, getting started or learning about technical analysis. But I thought this would be a good opportunity to bring in some of the tools that are available to help us to understand volume a little bit better. And one of the things to think about too is that volume has changed in the last 10 years of trading. The way that volume is reported has changed. The way that volume perhaps might be interpreted has changed. And it comes about as a function of institutional investors trying to obscure, not hide, not in any way nefariously, but trying to obscure their activities to make it less easy for other competitors to see what they're doing and front run their positions. So volume gets obscured somewhat. So let's talk about how we maybe can interpret volume given the information that we have, right? Because we know that it's going to be the imperfect data point. So what I'm going to do is I'm going to go back up to that gear icon up at the top. And once I've selected on equities that volume subgraph, the next thing that I'm going to do is I'm going to come one tab to the left where it says appearance. And we're going to change this appearance to make this volume something that perhaps is more effective for us to be able to see kind of that information and help us to interpret that. So this one selection right here, which says volume bars, and then selecting color as symbol ticks. If I click that radio button, you notice that it deselects the other one, which is preset color. Color as symbol ticks. If I click that one, and then I click on apply and OK, now it paints these volume bars according to the color of the candle on the chart. Meaning, if it's a red candle, that's an indication of a downward day. Price is closing lower than the open. If it's a green candle, price is closing higher than the open. And so that corresponding color of the candlestick corresponds to the color of the volume bar. It does not mean that this is all selling volume or all buying volume, because remember, that's a misnomer, that's a myth, because it's two-sided volume. What it suggests is there are lots of transactions happening, and we're relating contextually lots of volume to price movement. And you notice that we can have lots of movement in a candle and very little volume. Or we can have very little price movement and still a fair amount of volume, right? So that being the case, it's difficult to make that interpolation. Now, what is not difficult is noticing that there is a feedback survey out there in the chat. Do me a favor. Click on that feedback survey. James is going to pin it to the top of the chat here so you don't lose it. But click on that survey, open it up, set it aside so that you can come back to it after the webcast. If you don't, you can click on it at any time. That's fine. If you don't, you might miss the feedback survey. And we would hate for you to miss the feedback survey, because it's the feedback survey that helps us to make these sessions better for you. So go ahead and fill that out. We appreciate that. Thank you very much. All right. So now we have this relationship of volume to price. And I'm just going to zoom in into a narrower time frame here on BK. And again, remember, this is simply an illustrative an educational example. It is by no means any kind of a recommendation. And I don't have any other technical indicators on this particular chart. I'm just looking at volume. So let's see if we can relate price movement to what we're seeing with volume, and if that gives us some insight. And one of the things that we might do in terms of looking at these candles is looking at big volume spikes, because that's where we kind of have a statistical outlier. And remember, I said that volume gets obscured, because if we were to go back on a longer term chart on this particular stock, or really any chart that has more than about 10 years of history, you're going to see that 10 years or so ago, you're going to see more volatility in these volume bars, because that was really kind of around the time, 10 or so years ago, that institutional investors began in earnest obscuring volume by breaking up transactions into smaller groups of transactions, by breaking up transactions into different locations. And so there was a period of time where really you didn't see accurate volume, because there was a 4 or 5 day delay sometimes between a transaction happening on what was referred to as a dark pool of liquidity, an off network exchange, if you will, an unlit exchange, where it was one institutional trader calling up another institutional trader at another firm and saying, hey, let's do a deal. And then later that information would get reported. So weekly candles that were reporting weekly volume, were pretty accurate. But intraday candles, daily candles, not so much. Now that has sped up to the point where now daily candles are pretty close. Intraday candles may be a little bit delayed in terms of getting all of that information, and weekly candles aggregate more of the information. So when it comes to candles, or when it comes to volume bars, more information is better. So if we were to change this chart to a weekly chart, so I'm just going to change my time frame to a 1 year weekly, click on OK, and we're still kind of zoomed in here. We can see that now each one of these candles represents 1 week's worth of trading, and each one of these bars represents 1 week's worth of volume. And this is a more accurate representation of volume than if we were just looking at daily candles, but it's pretty close. But in order to make that relationship understandable, right, and we'll zoom back in on this time frame, I'm looking for the anomalies. Oh yeah, Myron says, is that legal? Absolutely, 100%. It's not nefarious. It's simply competition, all right? It's not personal. It's business. It is not shifty or underhanded at all. It is simply the rules of the game, right? So in looking at this information, now we need to be able to take advantage of volume anomalies. So some traders may say, all right, look, I'm looking for a break of a resistance level or a move above a moving average with a big volume spike, some sort of anomaly in volume. And the question then becomes, well, how do we know what's an anomaly? Yes, FINRA allows it 100%, for sure. What's an anomaly? How do we know where we've got a big volume spike? So we look at a candle like this, right? And so this is one of those situations where it becomes difficult for us to kind of make a correlation between price movement and volume. So take a look at this candle right here. This is the 21st of March, right? And we have big volume. We have a lot of trading volume. In fact, if we hover over that volume bar for the day, 9,720,000 shares traded that day. But price went absolutely nowhere, right? Price went nowhere. And likewise, we have these big candle days where there was a lot of price movement. I'll take this one in particular right here. This is the 8th of April, and price made a big range move. In fact, $5.53 of range, but the volume total was about 4 million, about half of the volume of this big trading day right there. So you can have both. You can have a big trading day, big range day without a lot of volume. And you can have a very, very small range day. In fact, a doji where open and close is exactly the same. And it was simply trading hands up and down. And that can tell us, right? Yeah, it's not a Godfather reference. Exactly, James. You got it. Okay. So I don't want to open that can of worms. It is simply an allowed scenario, as James Boyd points out, off-network or off-lit exchange discuss or transactions, simply like somebody calling up and saying, "Hey, James, you want to buy my house?" And James says, "Yeah, let's do the deal." And then it gets reported to the deed office and to the city and to the county and whoever, but the transaction can still take place that way, right? So nothing nefarious at all about that idea. But now this information can be somewhat helpful, but I'm going to make it a little more helpful for us, right? Because if we were to know what average volume is, then we can take advantage of those circumstances when there is abnormal volume, right? When there's an abnormal or a statistical outlier. So what I'm going to do is I can do a couple of different things. I can apply a moving average to this volume. So what I'm going to do is come up here to my Flask icon at the top of the page, and I'm going to type in SIMP, simple moving average, okay? We're familiar with doing that in terms of technical analysis. That's one of the tenets of technical analysis, is using a moving average. Now, simple is just as easy to use as any other moving average here in this particular case. But I'm going to go to the gear icon, and I'm going to change this to a 30 period time frame. So 30 days, since this is a daily chart. And what I'm going to do is I'm going to change where this information is coming from, because right now that's coming from price. But what I'm going to do is I'm going to change this to volume. So this is going to be a 30 period moving average of volume and not price. So if I click on OK and apply an OK, you notice where that goes. That 30 period moving average goes down into that lower panel. And in fact, if I click on the Flask icon again, you see that that 30 period or that moving average study is in the volume panel on this layout. Now, what I'm going to do is I'm going to come to that gear icon, and I'm going to make that a little bit wider so that I can see it. 30 period moving average on volume. So that's where my 30 period moving average is for volume. So what I could say is, look, if I'm going to get into a trade on a breakout, or if I'm going to get out of a trade on a breakdown, I want to be doing that on a day where there is above average trading volume. So we had in the last couple of days, I'm going to zoom in on this time frame right here, and I'm going to draw a line on the chart where there was perhaps a level of resistance where price had banged its head and come back down and banged its head and come back down, banged its head and come back down. So then this day right here, this is July 3rd, right? I have a breakout on this stock above that resistance level. But what don't I have going on alongside that? I don't have a volume that is above the average. It's in fact about half of the average, right? So, that might be considered to be a weaker breakout. If I were looking for a strong breakout, I might want to see volume above that 30 period average to give me confirmation that there was a lot of activity going on. Now, there are lots of other tools. We could use RSI, we could use the MACD, we could use the stochastics, whatever we wanted to give us a sentiment or momentum indicator. But just using price and volume here in this context, a break above the resistance level with lower volume tells us that perhaps this is a little bit weaker of a breakout, and maybe one that we would want to wait. Yeah, and Stay Gold says that volume really hurts my feelings sometimes. I get that. I understand. Now, If we were to add one more thing to this mix, it would be, well, okay, I don't want to just see average volume. I want to see 10% better than average volume, okay? 10% better than average volume. So what we could do is we could come back up here to that flask icon, and we could type in the word envelope. And we could put in a moving average envelope, okay? And so what I'm going to do is I'm going to take this moving average envelope and I'm going to use the gear icon once again. And I'm going to say, fine, I want to use a simple moving average envelope. And I'm going to make that length of the moving average 30 periods, just like we did below, just like we did with that moving average on volume. And I'm going to say, hey, I want to see when volume is 10% more than its average. So I'm going to change my source to volume, okay? And I'm going to keep that a simple period moving average, simple moving average. So what I'm going to show here in this particular case is just the upper, well, we can show both. I'll show both, okay? And I'm going to make those a little bit wider just so that we can see them. There's the lower band, there's the upper band. I'm going to make those 2 points wide, and we're going to click on OK and apply an OK. Okay, so here's what we've got. We've got a band, that pink band, that is 10% above the average, and we've got a band that's 10% below the average. That seems to be a little bit tight of a range. So you know what I'm going to do? I'm going to take that flask icon one more time. I'm going to come up here to that gear icon, and I'm going to say, you know what? I want to see 50% better than average to the upside. So essentially, average volume plus half of that volume again, right? And I'm going to say the same thing to the downside. I want to see when I've got less than 50% average volume, and I'm going to make that source of volume. Click on OK and apply an OK. Now, this band, this pink line right here, is average volume plus 50%. So if I get a volume bar that's outside that range, that moves outside that range, that's pretty significant volume. That's 150% volume, right? Right there. And likewise, if I have a day like this on this breakout that has volume that's down near about 50% less than average volume, I might wait to take that breakout. So it can give us an additional confirming factor in making a decision whether or not to enter a trade based on volume as a contributing factor, okay? Two other tools I want to show you in this mix. Actually, let's keep this really quickly here for this standpoint. Before we start to add complexity to this mix, I want to look at an opportunity that might be presenting itself. We'll take VZ here. And this is a stock that I was looking at actually a couple of days ago as we were starting to see that breakout. And as we start to see this move here, as it made that move, I was approaching 150% volume on this breakout and reversal. It kind of settled back again. Let me take a look and see if there was another one that I was going to look at here. There we go. No. All right, I got to find my breakout here that I was looking for. ABBV. I had it with me. There it is. Okay. All right. So now what we've got is this reversal pattern here on AbbVie, this bull flag rally up and a little bit of a pullback. So the question that I was coming up with this morning as I was putting this together was, are we going to see enough volume in this move? And the day is about half over. The day is about half over. Are we going to see enough volume in this move to give us that statistical outlier, to give us a reason to take this trade? And the answer is at this point, no. We don't have enough volume in this particular case to confirm this big engulfing pattern candle and the bounce up off of this low in this bull flag pattern. So we're going to wait. But that gives you an idea of how you might use this type of tool in confirming an entry signal. Now, had we been in the trend already, and let's kind of zoom back out here, had we been in this trend already, this is the scenario. We get this pullback below that maybe support level right here, right? And we get this big down day. And that big down day came on lower volume than expected. Not quite half of the volume, but it was lower than average volume. So that might be a reason, perhaps, to wait on exiting the position. Whereas back here, when we got that move to the downside, we had better than average volume. And so that would be perhaps a reason to exit a position, right? Now, 30 days is a good number, DCW, good question to ask. 30 days is a good number. 50 days is a good number, and it really depends on the type of trade that you're looking for. Shorter term trades, you may use shorter term price action, right? And volume action. Longer term trades, you may look for more accumulation of that volume. So this is one of those areas where, again, we can make that decision in terms of using this tool to help us to augment our decision-making process, right? Okay, now there's another tool that I want to show, and it's a tool that some of you are probably familiar with, but it kind of turns volume on its side a little bit. And instead of taking volume at a date, so volume by time, it takes volume by price. So what I'm going to do is, if we've got a stock that's maybe making a big breakout, I'm just going to run my Market Watch scan here really quick for stocks that are making a breakout today, because I thought I had a couple there and then they kind of faded on me as we were getting into this. So I'm going to take Nucor here today, Nucor Steel in UE. So we'll put that in here, and it's making a breakout today, but it's doing it on fairly low volume, but it's got a pretty good trend to the upside. So a lot of traders might come into this and say, look, we had a rally up, a little bit of a pullback, and then a rally higher, but it's doing it on significantly less volume. But let's see where there might be a level of support here and maybe a level of resistance that this might be running into. So Isaiah is getting it right off the top. I'm going to come up here to the flask icon, and we're going to type in the words volume profile. And there's this indicator right here. Now, if you've watched me on the Schwab Network, by the way, the Schwab Network is brought to us by our media affiliate, Charles Schwab Media Productions, separate but affiliated company. But if you've watched me on the Schwab Network, one of the tools that I use quite frequently on the Schwab Network is this tool right here, the volume profile. And so I'm going to put volume profile on here. And I'm going to click on apply and OK. And I'm going to zoom back out of this chart so that we can see where that information is. So just by default, here's what you get, is this kind of histogram-y looking view on the right-hand side in that expansion area of your chart, okay? And what this says, what each one of these lines that make up this histogram show us, so for instance, here's 131, up here is 149, right here is 121. What that shows us is the amount of trading volume at a particular level, not by time, but over the aggregation period of this chart, how many trades have transacted at the 128 level, right? So you can see where that 128 level is here. That's a fair amount of volume. It's not the highest volume. That's what's called the point of control. That's where this 121 level is. But that's pretty significant volume. So the length of each one of these bars represents the amount of volume traded at that particular price. So what I'm going to do is I'm going to find where that bar is. I'm going to use my trend line tool, and I'm going to draw a trend line at that level across that volume bar. And I'm going to say, hey, look, if I go left to check and see confirm what's happening to the right here, and I draw that line in, I notice that happens to be a level of support. That's where there's a lot of transactions going on at that particular level. By the way, it was also a level of resistance here. So almost always, not always, but almost always, you're going to find that where you have levels of significant volume, meaning lots of transactions that have happened at that particular location, that's almost always going to be a level of support or resistance. And when you have less volume, that's less likely to act as a level of support or resistance because there's less likely to be kind of that recency or anchoring effect to that particular area. So for instance, let's zoom in on this time frame right here and this breakout. Notice that while there's not a lot of volume transaction going on down here, there's not a lot of trading volume at this particular level where that breakout is occurring. In fact, that's an area of some lack of transaction volume. That may be one of the reasons why price is getting pulled up through this area. If I were to choose to enter a trade at this point, breaking out of a resistance level on a low volume by price bar, and in an area where there is a lack of volume, meaning notice where all of this volume was occurring back here, price has been here, this area right in this 139, 140 range to 149 a number of times. I might look for this area where I see these next big volume bars by price to be the next level of resistance overhead. So I'm going to take that line and I'm going to draw it back to the left. Again, looking left to confirm right. And I'm going to zoom back out and I'm going to see that, hey, that might very well be, I've got a support level there, resistance here, support here. That somewhere in this area, right around the 150 mark, is likely to be that next area of resistance, given the fact that there is some activity at that level. And if it breaks through that level, look at where volume kind of tails off here. There's likely to be some upward movement. The amount of resistance up at those levels is less. Same thing if it were to break down through these levels of support. So this is a tool that can be used not only on the daily chart, but for those of you who are more intraday traders, you can put this on a 5-day, 5-minute chart, and you can see over the course of the last 5 days where that volume activity was. Notice big volume bar, lots of trading at that price, level of resistance. Big volume bar, lots of trading at that price, level of support, level of resistance. Big volume bar, lots of trading at that level, area of support or resistance. So this is a tool that can help you to confirm levels of support and resistance and also give you some likelihood or lack thereof of price moving one direction or another. So what we're going to do is I'm going to use that. I'm going to go back to our 1-year daily chart, and I'm going to use this as the basis, even though I've got lower volume here on the volume tool, right? Volume tool. That point of control is the point at which there was the greatest amount of transactional volume at a particular price. So that is the price. So it's called the point of control because that's the price at which there was the greatest amount of transactional volume that occurred, right? So you could use that point of control, meaning that's likely to be a level of support or resistance. This is the easiest way to approach that healthy. So I'm going to look at taking this trade on this breakout of resistance. Let me grab my line tool here. Breakout of this resistance, and I'm going to say, look, I know that I've got a level of support here at about the 129 mark, and I've got potentially a level of resistance up here around 150. That gives me some characteristics that we can use to make a decision about trading. So I'm going to do this. I'm going to right-click here on the chart, and I'm going to buy custom with an OCO bracket. And I'm going to say, fine, I want to get into the trade now, but I want to get out if it goes up to 151, right? That's that next level of resistance overhead based on the volume profile tool, 151. And I'm going to make that good till cancel. And I'm going to get out if the price goes down to this next level of support that we drew in here at 129. We're going to call it 129.70, right? 129.70. And I'm just doing this, and I understand that that's a fair ways down from where the price of the stock is, right? 129.90. But basing this off of the volume profile, I'm going to make that good till cancel. We're going to click on confirm and send. Now I've got a potential move to the upside. I've got a potential move to the downside, taking the trade off in either direction, right? Okay, so I'm going to put this in my stocks group. We're going to click on send. We're going to fire that order off, and we'll see if that order fills. I might have to move that limit order a little bit to get into that trade because I put it a little bit close. Now, Lola asks a great question. What are those other two lines? There we go. What are those other two lines around that point of control? So notice that there's this line up here, and there's this line right here, and the distribution of volume puts more volume down here on this lower side, right? So this line right here is essentially one standard deviation. There's some skew in this volume. One standard deviation from that point of control and one standard deviation above the point of control. Lots more volume to the downside. Therefore, that one standard deviation range is smaller on that side than it is on the top side. And so that's what gives you those two lines. They can also oftentimes act as, and if you draw those lines, oftentimes we'll see levels of support and resistance occurring at those levels. Listen, we've looked at a couple of different volume tools. We placed a couple of different trades based on those volume tools. Volume is not a scary subject, but neither is it. It's be all end all of determining when to get into a trade and when not to get into a trade. So learn when to use volume appropriately. Here's where you go to find more information about that. If you type in the word volume, you're going to see some great tools. Trading stocks with the volume profile, volume preceding price, using on-balance volume, swing trading, example trades using the volume profile tool, how to quickly find price reversals with volume profile, volume confirmations, choosing entries and exits with volume profile. Lots of different ways that you can use these tools for more information. By the way, this is a great resource, and if you haven't already, click on that subscribe button right there to subscribe. And by the way, if you happen to like what you see today in this webcast, then go ahead and click on that like button as well and let us know. And remember to fill out that feedback survey so that you can help us to understand how we can make these webcasts better to you. My thanks to James Board for helping out. My thanks to all of you for helping out with this discussion today and being active in the chat. Thanks for joining me for this discussion, and we will see you guys again very soon. Take care, everybody. Bye-bye.